Welcome back to the deep dive. Today we're really getting into something fascinating. We're diving deep into the world of AI-driven crypto trading. Can get pretty ruthless, actually.
Yeah.
Yeah, so our main source today is this document. It's called Operational Briefing v4.8 for a system they call LiqBot PRO. And we're basically going to unpack how this AI bot says it makes consistent profits in crypto, which is famously volatile. It uses something called liquidation cascades.
Right. And our job really is to pull out the key bits for you. How does it work? What are the maybe surprising things inside this briefing? And what does it all mean, sort of bigger picture, for markets, automation, that kind of thing? We want you to get why this matters, not just what it is.
And I mean, the numbers they claim right at the start are bold. Over 65% winning trades, a 3-to-1 max risk reward. And they say it's been profitable over, at this, 2,847 trades on more than 15 crypto pairs in just 6 weeks.
Okay. Yeah, let's definitely unpack this. So starting with the basics, the performance foundations, one of the first things the briefing stresses is risk management excellence. They're saying the bot shifts its risk, sometimes conservative, 1.1, sometimes aggressive, 3.1, but stays profitable. Yeah, and what's really striking about that is the resilience. They call it market condition resilience. That 65+% win rate, apparently it holds up whether the market's going up, down, or just sideways. And that kind of adaptability across such different market types, well, it suggests the algorithms underneath are pretty sophisticated, right? They must be adjusting strategy on the fly. Makes you wonder how they manage that shift so smoothly.
And it's not just the big picture strategy, it's the execution too, the detail execution precision, claiming average slippage is only 0.02%. Yeah, and a 99.7% order fill rate. I mean, for a trading bot, that's critical, isn't it?
Absolutely, because even tiny bits of slippage,
they add up.
Exactly. Over thousands of trades, it eats away at your profits.
Yeah.
So numbers like that, if true, suggest they've got a really solid setup.
Okay, so risk management, precise execution, fine. But where does it really make its money? The briefing talks about this beast mode. Apparently it's about dominating ranging markets, and the price is just stuck.
Yeah, where lots of human traders get chopped up.
Right, and the numbers here are, well, almost hard to believe. A 90% hit rate in those flat conditions. It even says with a negative risk reward sometimes. How? How does that work?
Well, it seems to zero in on a, let's say, persistent weakness, human psychology, when markets go nowhere. See, markets range maybe 60-70% of the time.
Right. Feels like it sometimes.
And retail traders, they get bored, impatient, they chase little moves that fail, get stuck leveraged the wrong way, and then boom, liquidation cascade. LiqBot seems designed to just systematically exploit that impatience.
Okay, so this liquidation cascade mechanism, they break it down. 3 phases. First is accumulation phase. Basically, spotting when lots of retail leverage is building up unusually.
Detecting the pile on.
Then the trigger phase, pinpointing the exact price where all those positions are going to get wiped out. Mass liquidation.
The breaking point.
And finally, execution phase. The bot jumps in with surgical precision, they say, betting against that retail flow that's about to get crushed.
Counter-trading the cascade. Makes sense.
And they give examples, like Solus DT between $89 and $94, apparently 23 wins out of 25 trades. Average hold time, just 47 minutes.
A quick turnaround.
Yeah. And Ethos DT between $3,200 and $3,350, 19 out of 21 trades profitable. Max loss on any single trade, minus 0.8%. I mean, the briefing presents that as pretty remarkable consistency.
It certainly sounds impressive on paper.
Okay, so LiqBot PRO seems to handle the sideways grind, but what about when the market actually moves? Big trends. That's often where retail gets hurt too, chasing highs or catching falling knives.
Yeah.
The briefing actually admits this was tougher. It says high volatility equals lower performance, expected, if they didn't have a specific fix.
And that's a really key point, because in a strong trend, those liquidation patterns you exploit in ranging markets, they can break down. What looks like dumb money getting liquidated might actually be, smart institutional money pushing the trend. Smart momentum, they call it.
Yeah, okay.
So the challenges are different. You get false reversal signals that the trend lasts way longer than you think. Stop-loss hunting becomes less predictable. It's just, a different animal entirely compared to a range.
So what's their answer? They call it the momentum filter. Sounds complex. It uses, volume profile analysis.
Looking at where the volume is trading at specific prices.
Right. Order flow imbalance.
Gauging, like real-time buying versus selling pressure. Is big money stepping in?
Okay. Multi-time frame alignment checking signals across 5-minute, 15-minute, 1-hour, 4-hour charts, and volatility regime classification, basically figuring out what kind of trend it is.
And with that filter switched on, the reported results are pretty dramatic. Win rate in trending markets jumps from 45% to 72%.
Wow.
Average trade time drops from over 3 hours down to 1.8 hours, and risk-adjusted returns up by 156%.
That's huge.
It is. What's really fascinating there is it shows the bot isn't just executing a fixed strategy. It's learning, adapting, and significantly improving its game based on the market conditions. That adaptability is key.
Okay, let's talk about the brain here. The MetaQuant score, or MQ score. They describe it as this proprietary machine learning thing. Evaluates markets across 47 parameters
Right.
and gives like an IQ test to every potential trade.
Yeah, basically a confidence score before pulling the trigger. And it's weighted. So 35% is market microstructure, the really granular stuff, order book depth, bid-ask spread, tick data.
The plumbing.
Exactly. Then 25% is sentiment analysis, social media buzz, funding rates, open interest, the usual fear and greed stuff.
Okay.
Another 25% is technical confluence, making sure different indicators line up across time frames, support resistance levels, volume confirmation.
Right.
And the last 15% is liquidity mapping. Things like liquidation heat maps, seeing where those stop losses are clustered, plus tracking big whale while it moves, exchange flows. It's pulling data from a lot of places.
And does the score actually predict success? They break down performance by score range. So for the best scores, 80 to 100, which is only about 8% of the setups, it hits an 89% win rate. Average profit plus 2.4% per trade.
Pretty strong correlation there.
Yeah. Even in the middle range, 60-79 score, that's about 35% of trades, still a 71% win rate, plus 1.8% average profit. And the lower range, 40-59, which is most of the signals, over half, still over 50% win rate, plus 0.9% profit. So the score seems to mean something.
It definitely suggests the MQ score is effective at identifying higher probability setups. Though, they're upfront about what needs work.
Right, they mentioned that.
Yeah, apparently it's too tight for very short-term scalping trades right now, and it adapts a bit slowly, maybe daily cycles.
Yeah.
But they're already rolling out improvements.
Like what?
Real-time adaptation, moving to 4-hour update windows instead of daily. A dedicated scalping mode coming soon for trades under 5 minutes. And cross-asset learning. So if it learns something works on, say, one Solana token, it can try applying that pattern to similar tokens. It's a constant refinement loop.
Okay, now, this next bit in the briefing, it's pretty blunt. It asks where the bot performs best. And the answer, using their term, is shitcoins in.
Yes. The emoji is included in the briefing, I assume.
Apparently so. And meme coins, specifically on the Bickett exchange, the briefing literally says fresh meat gets liquidated hardest on shitcoins, and newbie retail equals ultra-predictable liquidations. This is where it gets really interesting, focusing hard on the psychology.
It does. And it kind of explains why lower cap assets deliver superior returns for this specific strategy. It taps right into that predictable retail behavior.
How so?
Well, think about it. Small caps, meme coins. They generate insane FOMO, right? Fear of missing out.
Oh, yeah. Big time.
So new traders jump in, often with way too much leverage, because they see the price flying and don't really grasp market structure or risk. That creates these perfect, concentrated pools of money just waiting to be liquidated.
Setups waiting to happen.
Exactly. Plus, you've got the whole social media influencer effect, people shelling coins, followers piling in at the absolute worst moment, often right at the top before a dump.
Well, it's human nature creating opportunities for the algorithm.
The briefing breaks down asset performance, too. Meme coins like PKE, SHIB, Doji E types, they claim an 87% average win rate plus 3.2% average profit. And these liquidation cascades happening every 4 or 6 hours, especially when Asian and European trading sessions overlap.
High frequency opportunities there.
Seems like it. Solana ecosystem tokens also strong, 78% win rate, though more volatile. And interestingly, it compares ETH and BTC. It says ETH has more retail participation, more liquidations, whereas BTC is more institutional heavy, so less predictable for this specific liquidation hunting strategy. That makes sense. Fewer panicked retail traders getting flushed out on Bitcoin compared to, say, a brand new meme coin.
And then they get specific about exchanges. Bidget is named the top performer. Why? High concentration of leveraged retail traders, apparently. And Bigyet lists new, hyped coins often, drawing in that FOMO crowd, creates perfect liquidation setups with fewer big institutional players messing things up for the bot.
A specific ecosystem that fits the strategy.
Right. Binance is mentioned as good for major pairs, but maybe too much institutional flow on the hot assets. Bybit and OKX. Good for technical setups, maybe a more experienced trader base there, they suggest.
So the platform itself and the type of traders it attracts is a huge factor. It really does raise questions about market structure, doesn't it?
Yeah.
Different venues enable different strategies.
Absolutely. Okay, so that's the now, but they also look ahead. The next generation AI trading architecture, immediate upgrades. They're saying the future isn't coming, it's like being deployed this weekend.
Yeah, this part is really about pushing the boundaries. They talk about advanced learning systems already being implemented, like a pattern replication engine. It's identified and cataloged over 15,000 profitable trade contexts, claims 97.3% accuracy, analyzes them in under 100 milliseconds. It's not just seeing what worked, but learning why.
Wow, learning the why.
Then there's reinforcement learning 2.0. The goal isn't just maximum profit, but edge preservation, learning how to keep its advantage consistently, constantly self-correcting.
Okay.
And maybe the most sci-fi sounding one, predictive market modeling. Claims it can anticipate these liquidation cascades 15 to 30 minutes before they happen.
Good. Ow.
With 83% accuracy, they say.
Yeah.
Average early warning of 22 minutes. Imagine knowing 20 minutes ahead of time that a cascade is likely coming. That's a massive edge.
No kidding. And this weekend's update, what's in that?
3 big things. Real-time strategy evolution, adapting every 4 hours now, not daily. Cross-asset intelligence, taking winning patterns from one coin and applying them to similar ones automatically. And get this, emotional intelligence, a new sentiment engine trying to read market fear and greed in real time to guide its trades.
Reading the market's mood.
Wow. It's aiming for something close to a living system, constantly evolving.
So what's the end game here?
Complete trading autonomy, that's the stated goal. A system that finds new market edges by itself, adapts instantly, scales its bets based on confidence, manages risk better than a human.
And crucially,
It never gets emotional, never gets tired, never misses an opportunity. That's the vision they paint. A fully autonomous, self-sufficient trading machine.
incredible. What a deep dive into this LiqBot PRO briefing. I mean, from the precision execution, the risk management, to really weaponizing retail psychology on shitcoins.
Using their term.
Using their term. And then these next level AI upgrades happening right now. It's a really stark look at where advanced crypto trading is and maybe where markets are heading.
It really is, and it leaves you with a pretty provocative thought, doesn't it? If AI can get this good at anticipating and basically exploiting human market behavior, these inefficiencies we create, what does that ultimately mean for us, individual traders, for market efficiency overall? Does skill even mean the same thing when machines operate like this?
Yeah, definitely something to chew on. How this kind of automation might reshape the entire financial world and maybe even how you approach understanding complex information yourself. So what does this all mean for you? Lots to think about.